do that. All
Should be
right,
able
so if
to.
you want, I could share this with just you on this one. Or if you're okay with it, I could share it with everybody in YouTube. It's up to you.
Sure, yeah, I'm okay with it.
Okay. All right, so pretty wide open. What questions do you have?
Uh, I, Everything's organized on Discord. I do like the membership. Um, as our previous discussions, I'm just obviously time. Just want to give it time to feel it out.
Right.
Just because I think I've been with you for like 2, 3 weeks, but I definitely like the I guess the strategy and the process of it, just because that's what I'm familiar with.
Uh-huh.
Um, Mainly the credit spread portions. I'm fairly new to the cash secured put and the wheel. I really want to get more involved with that.
Okay.
And I guess I've been doing it on low IV stocks just to get, uh, as weird as it sounds, getting a feel for the wheel. So I'm
That's
just
fine.
kind of sticking with like Verizon and Coke for right now. But I do like the whole concept. But yes, I'm not as familiar with the cash secured puts, and that's why I kind of am following your lead on that.
All right. Yeah, we could go over that primarily. So Cassiger puts was actually how I first started with options.
Okay.
Cassiger puts on the covered call side. Um,
Okay.
already was mostly a long-term investor about 7, even to 5 years ago. And I was
Okay.
just accumulated shares at whatever I found was a good price, and I'd buy them month after month. Bank
Okay.
of America and Pfizer were the two main ones where
Okay.
I just kept buying every few, weeks whenever I had extra cash.
All
And then I
right.
had over 100 shares of those. And then I looked into the covered call side.
Okay.
So
So you accumulate more. You said you do it every month. You would do cash secured put.
yeah, I did them in my Roth IRA
Okay.
where I was first just accumulating shares in the buy and hold.
Okay.
And
Okay.
eventually I had enough for at least 100 shares of it.
Got it. All right.
So if you look at Bank of America, it's pretty low
Yeah,
share price.
it's funny you say that. I didn't get assigned on them, but I've been doing the puts on them as well. But I did not get assigned, so
Yeah.
I
All
had
right.
2 weeks of doing that on them.
All right, that's good. So what's good about Bank of America is this was the weekly chart for like a year.
Okay,
Last 3 years. This is the last 3 years. And you
and
can
it's the
see that
weekly.
there's not a ton in movement. So 18 to 50, I mean, that actually sounds like a bit of movement, but when you look at the bars for each individual week, it's actually not
Yeah,
too bad.
I'm
My
gonna pull that
my
up.
video's like freaking me out here. Sorry. I think I have too many programs open. So, all right, just ignore the camera. All right. Um, so Bank of America has a pretty low IV as well.
Yeah,
High volatility in the 20s. So you're not going to make a ton of money on these, but
right.
I was able to just see, over it was about a year or so, I just kept buying shares of Bank of America. Once I
Okay.
had the 100 shares, I was just curious at what could I do to possibly lock in some profits.
Mm-hmm.
Like I could have kept it as simple as sell the shares, and it was a decent return at the time.
Okay.
But I wanted to see like maybe I could take in some income, essentially renting out the shares to somebody else at
Right.
a price that I like it at.
Okay.
So for instance, let's say I was buying Bank of America every few weeks or so, and let's say my cost basis was about $30 a share.
Okay.
And right now we're at $35 a share. So nothing
Yeah,
wrong
that.
with just selling those shares if you're not really liking the stock much anymore. Maybe find a different opportunity. You would
Okay.
lock in $5 per share, make 500 bucks, right?
Right.
Pretty decent return,
Right.
pretty over
Right.
10%. But what you could do instead is look to sell a covered call at you could do at the money if you want. If you
Okay.
go near at the money at like say 36 or so, you're gonna get a pretty decent premium, right?
Yeah.
So here you can make $50 essentially renting out your shares in the next 26 days. That's over 1% on your money. And then if it happens to
Yeah.
stay below 35, then you just
Keep
take out
that.
the renters in your house and then you just do
Mm.
it again over and over again, right?
Yeah. 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 I
Um,
think that's what makes it appealing.
yeah. It's a good long-term conservative strategy. What a lot
Okay.
of people don't realize is when you're selling covered calls, especially above your cost basis, it's
Hmm.
actually a safer strategy than holding stock, right?
Okay.
If you're holding stock, obviously the stock could go up and down. If it
Hmm.
drops a lot, but you sold a covered call, at least you took in some money in the meanwhile, right?
Right.
It's like having a house that's empty. If you have a house that's empty and you're trying to sell the house, and then let's say the first month nothing happens, you didn't get any money from a renter, right?
Right. Yeah.
But
Right.
then in this case, you're actually getting some income in.
You're getting something out of it.
Right. I know I talked to quite a few. There's a few members on Theta Traders, a lot of just random friends that I have that are retired and near
Okay.
retirement. They have really large account sizes. And they do this all the time. They keep it super simple. They
Okay.
just buy shares and sell covered calls a little bit out of the money usually.
Okay. And that's kind of what really draws to my attention and trying to apply those same concepts and just continuous income.
Yeah.
And like I said, just because I'm fairly like new to the process.
Mhm.
Um, I guess one of the biggest things that and I think this is where not having a volatile stock, I guess, it not screws you, but it makes it harder. Say if you do have that, your strike, this the sold call above your cost basis, and then say there's a big drop on the stock, it could take a while to, right? I guess
Yes.
like I just don't know of any other strategies other than maybe temporarily. Um, that's where people do protective puts, right? If
Right. That's what I was about to mention.
okay,
But yeah, protected put it's okay if the stock absolutely tumbles and you want to lock in some profits. The problem is your overall profit will be a little lower because you're buying those puts.
right, right,
But there's
okay,
nothing wrong with that.
okay,
If let's say you're in Bank of America, cost base is at 30, it's at
mm-hmm,
35. If you were considering something like that, I'd probably go 3, 6 months out and
okay,
buy one protected put pretty much at the money, maybe slightly lower than at the money.
okay. So 6 months out at the money.
Yeah, because you wouldn't want to have to be buying these over and over again. And if you
Okay, all
go
right,
pretty far out in time, the theta decay on it is pretty minimal.
okay,
So
that
for
makes
here,
sense.
I could buy a 35 put, spend $200 for protection there. The problem is if it goes to $33, you pretty
Mm-hmm.
much broke even on that, right?
Yeah,
But
okay,
the put itself would expire worthless.
okay,
Because the way to figure that out is it's 35 minus the 200 that you spent. Your 33 is your break even at that point.
okay, all
But
right,
you would need it to go below 33 for that put to even be worth anything.
okay.
That's
So
more
yeah,
anti-theta
so
traders,
you
but it
just
is a
gotta
good
really,
hedge.
you really just have to consider the break even with the put and I guess how
Yeah.
confident you are in it dropping.
Yeah. I mean, if
Meanwhile, I
you're
guess
pretty confident it's going to drop and you already had a profit, you probably just get out of it.
just get out. Okay, yeah, that makes sense
You could also sell in the money covered call, which is a pretty good strategy as well.
for protection.
Yeah, for lowering your break even, you get more premium in. And if it drops a little bit, you're a little better off than if you sold them at the money. Like
Okay,
say it's a 35 and I sell the 30 call, that's $600 right there.
yeah,
So if it does drop to 30, you actually profited in that because you would have lost $535, but you took in 615.
okay,
Yeah, in the money covered calls is a very conservative strategy.
okay,
But those are all different cases where you're already like starting off better.
mm-hmm,
In many cases, obviously, you're gonna have to start somewhere. And what if you just started this position right at 35, like Tuesday, and then it drops right away? That's
yeah,
where it gets a little tricky.
okay,
One of the best ways to cushion it is lower IV stocks. You might hear of a lot of traders doing the wheel strategy saying only do this with stocks you're willing to own for long
yeah,
periods of time, which is pretty true in most cases. Like you don't
okay,
want a meme stock and like buying AMC and then it goes down to 1 from 5.
right,
Can't really do anything about it. And I learned a little bit of that the hard way a few years ago.
Okay,
I was selling pretty high meme stocks, but
okay,
really far out of the money. Like the AMC one I mentioned, I sold the 3 put, but I only
okay,
did a few contracts. I used to do a lot more contracts a few years ago.
okay. So you
But
just pretty much gotta understand like a stock like that could go to zero technically, or at least go
for good
down
fun, yeah.
pretty bad. Yeah, okay.
So yeah,
I
lower
think
IV stocks are in general good. So what I
okay,
would, if I were you, I'll try to think about what type of return are you okay and happy with. If it's a
okay,
lower IV stock, you got to assume you're not going to make as much than with a higher IV stock, just because the
yeah,
premiums are lower. But if you one of the ways that I go, I think this might slightly beat out long-term buy and hold. I do
okay.
this with Realty Income, ticker symbol O.
Yeah, yeah, I've heard of that. Don't they have, do they have monthly
They do
dividends?
monthly dividends, about 24 cents, I think it was, a month per share.
Okay.
And they've raised their dividends 100 something crazy amount of
Oh
times.
wow, yeah,
Yeah,
they're
it's,
okay.
it's an amazing dividend stock. But I'll
Okay.
go 3 to 6 months out and I'll
Okay.
sell very low deltas.
Okay.
Like
Of
I
cash
sold
secured
this
puts, you
one
mean, or the
last,
call?
what was that?
Of the covered call or the cash secured put?
Covered call.
Okay.
So yeah, like I sold the 75, I think it was. I took in $60, but it's gonna be 200 days later. So it's not a ton of money we're talking about. You might get one share of stock with it,
Sure. Okay.
but I feel that it's better than nothing. There's a very low chance it'll get to the 75 anyway.
Okay.
So that's one thing that I do, and just long term, my wife's Roth IRA actually.
Okay. And the monthly dividend is a boost to it as well.
Yeah, exactly. You get your monthly dividend, you could get a good amount of appreciation. Like even though 66, I don't mind selling at 75. That's a good capital gain, right?
Okay. Yeah, exactly.
Plus the dividends too.
Okay. Yeah, I was curious about that. Okay, I'm glad you mentioned that because I was really curious in monthly dividend stocks and selling covered calls. They
So
just don't have a lot of expirations, right?
yeah, not as many.
Okay.
So Maine was one of them where I actually just lost my shares over the weekend.
Okay.
I sold a 40 call when it was around 34, and it happened to go right above 40 at expiration.
Oh, wow.
Now
Okay.
in my Roth IRA, I have $4,000 just sitting there because
Okay.
I essentially sold my 100 shares of Maine at $40.
At 40.
Yep. But that was a
Okay.
good trade so far because I bought around 34 and change. I think the cost basis
Wow.
was around 35. This
Okay.
pays monthly dividends as well.
Yeah, it's like a two for one then.
Yeah. So now at this point, I could decide a few things, and that's why I put it on the workshop channel. I could
Okay.
just rebuy the shares on Tuesday, pretty much at the same price that I sold it at, give or take a few dollars there.
Okay.
Then maybe go out, 3 months, 6 months or so, and then sell the 45 call. Again, trying to lock in a $5 gain there, right?
Mm-hmm.
And you get a little bit in premium, not a ton, get $40. You can buy an extra share for free.
Okay.
But what I might end up doing is probably selling the 40 cash secured put. It's very
Okay.
close. Like there's no right or wrong answer here. I think either one's perfectly okay. But by selling the 40 cash secured put 26 days from now, it's giving at least $75. I'm pretty
Okay.
sure it'll be 85 or so in the middle of these two. And that's 2% on your money in a month, right?
Yeah.
Now I wouldn't get the
Okay.
dividend by doing that.
Right.
Let's see what
Okay.
the dividend is. It's about I don't remember it's on my head. 23 cents per share.
Okay. So you just got to consider that's what you would miss out for that month on
Yes, I
the
wouldn't get the 23 cent, $23, but
the
if
premiums making
I
up for.
the premium makes it up. I could
Okay.
buy shares and sell. I can't sell the 45 because it doesn't even have a bid ask. I would have to
Okay.
sell the 40 call for the next month. So if I
Okay.
want to be a little bit more hands off on it, I would go out to June or September and go with the 45 because that at least is paying something, right?
Yeah. Okay.
But otherwise, a lot of people that I'm talking to are thinking they're going to go sell the cash secured put because it might be near the high of its range. So you might
Okay.
sell the put
That
and get
makes
the
sense.
price.
Okay,
46 is the high in the last few
yeah,
years.
okay, that makes a lot of sense then.
Yeah. Have you ever looked at the dividend achievers, the dividend aristocrats, any of those lists that have all the different dividend stocks?
Um, like the larger cap companies?
Yeah.
Yeah, like J&J, Walmart. Um, definitely why I went in Verizon, just
Uh-huh.
because their dividends were strong. But not I guess I didn't do much research into them. Just more, I guess, finding the balance between a stable stock and a good dividend, but
Yeah.
mostly all the dividends are pretty stable.
In general. If you want to look for more on dividends, you go to seekingalpha.com.
Okay.
You just do a free account there. Yeah, my camera's really tripping out.
I see that.
Anyway, if you go to like say Verizon, click on dividends,
Okay.
and then you could go to dividend history, dividend safety. You can just see
Okay.
a little bit for free here.
What's dividend safety mean?
It pretty much shows all the different payout ratios and if it's a safe enough dividend, like will it keep the dividend or not.
Ah, okay.
And you can look all into that. One of the main things to look at is the amount that they're paying out to dividends compared to how much money they make.
Okay.
So that's a payout ratio. If your
Okay.
payout ratio is really high, that means that they're giving a large amount of their profits to the shareholders in dividends,
Okay.
but it's not going to leave them a lot of room for growth.
Okay.
So if you look at, say, Microsoft, the payout ratio is pretty low because they pay a relatively low dividend and they make a
Okay.
lot of money. So Microsoft's probably a very good dividend company, not even considering the possible growth on it. But like looking at the history, you can see they haven't cut their dividend, it just steadily increases.
Oh,
The
wow.
actual dividend
Okay.
is really, it's like 1% though. So it's going to be hard to make a
Hmm.
living off it.
Right.
But if you look also at dividend safety, payout ratio is 30%, which is more than reasonable for them.
Okay.
Now, Coca-Cola, though, is relatively high in their payout ratio. We're at 80%.
Oh, wow.
So that means a large amount of the profits they make is going to dividends. And they
Wow.
had
Okay.
relatively iffy earnings lately. I think one of their sports drinks didn't sell as much as they thought.
Okay.
So things like that also depends on the sector you're in. So Coca-Cola is still long term most likely going to be around and make money, right? But if you
Yeah.
look at a tech company that pays dividends, you want to look into these things and see if the payout ratio is not too high. In
All right.
general,
Thank
I
you.
think around 40% or lower is good. If you're past 40%, then it's hard for them to grow necessarily.
Okay.
Just
This is good to
ballpark
know. I
numbers.
didn't. So this is J&J there, and so they're at 44.
Yeah, which is still fine for them. The history is very good. I mean, that's a great chart, right?
Wow. Yeah.
My cousin worked for J&J for about 25 years,
Yeah.
even during the Tylenol fiasco where some people contaminated some of the pills. But she was just buying shares over and over from her company, and she could pretty much live off J&J dividends. And
Really?
yeah,
Wow.
like she has a ton of money in it.
Yeah, yeah, I kind of want to put a percentage of my portfolio into something like a stock like this that is stable. And honestly, I think, didn't they just recently have some bad news come out that made them drop?
Yeah, I don't know off the top of my head, but
Yeah, but point being, it might be a good time to maybe start looking into them too, that if
yeah.
that's the case.
This is the dividend achievers list. I think this is the last 10 years. They're different lists like the kings and the
Okay,
aristocrats and all that. If they've raised their dividends the last 10 years, they're probably going to continue doing that.
they're going to be doing okay. That's a
I don't want
good,
to explain that ad, but
that's good
yeah,
to
you can
know.
consider a list like that, and I left it in the chat.
Okay,
So you
thank
can
you.
look at some that are relatively lower in share price if you want to be selling covered calls against it as well.
Okay,
Fortunately, the
yeah,
share prices are usually relatively high, so you would have to have a lot of funds in order to do it.
okay,
Few of the main ones you consider in Verizon, Bank of America. What was it? Pfizer's not too high, I don't think.
Yeah, Pfizer did. I do have the funds for some of the larger ones, so I
Right.
wouldn't. I'm just more, like I said, I'm more of getting a feel for it with the lower, I guess the lower ones like Bank of
Yeah.
America and Verizon
Hmm.
until I get comfortable, I guess, if that
Yeah.
makes sense.
No, that makes sense. That's a good way to go.
Okay.
Cube, they do the storage. I
Ah,
could pay
okay.
them $45, and their dividends are good from most I checked.
Okay.
Let's
So
see.
Pfizer Cube.
Yeah, look at Cube's dividend history. Yeah, since 2010. Imagine you bought shares at 2010, paying 3 cents a share.
Yeah,
Now you're getting
wow.
49 cents a share. The
Wow.
same exact stock.
That really opens my eyes to I not realizing how companies gradually increase their dividends.
Yep. We could think just more long term, like not even worrying about option stuff. Buying stocks that are in the dividend achievers, aristocrats list, and buying them regularly and then just holding them for decades is
Mm-hmm.
pretty much a surefire way to do well later on.
Yeah.
I mean, these are companies that are relatively stable. You could do ETFs of it. I do VYM. That's the Vanguard
Yeah,
Dividend
I've heard
Yield
you
ETF.
mention that, or yeah, I saw you mention them a lot.
Now it looks a little variable, but each quarter is a little bit different. But it pays
Okay.
a relatively good dividend, and the trend is slightly upward, as you can see. But
Okay.
they have hundreds of holdings in this one place.
Okay.
A CHD or SP. That's another one that's pretty popular.
The
It's another,
Schwab,
as you can,
yeah.
yeah, the Schwab one. As you can see, the dividends like a little bit variable, but it just trends upward every quarter.
Okay. Yeah, I'm gonna look into that one too then.
Yeah, I would probably do a large amount in a CHD or VYM, just to
Okay.
have that, just variability and having a lot of
Just have that
stocks there,
buffer. Yeah.
right? And
I
then
have,
if you want to do individual stocks in the meanwhile, if you have funds too, you can feel free to do that.
yeah. Yeah, I wanna, because I have right now I have cash on the side and I kind of want to put it in I guess a basket that's like a safety net that
Mhm.
does this and then sell calls on them.
Yep.
Because I just
VYM, you would need like 11 grand to do it, but if you bought
yeah,
100 shares of VYM, again,
okay,
I wouldn't want to sell them monthly because they're not going to pay much. The IV is
okay,
relatively low. You're not going to make much money on them. But if you go
okay,
say 3 to 6 months out, let's go to July. It's at 109. I would want a little bit of capital gains. So I'd probably sell around the 115 or 120.
okay. 3 months out, you said?
Yeah. This is for July. So 150 days out. If you sell the
Okay.
115, you can make $150.
Yeah, okay. Yeah, I see that.
And
All right.
then what I usually do is I take that premium, I buy another share.
Okay. All right.
It seems like it's free. It's not really free because you're limiting your upside. But
Right.
these dividend stocks in general usually don't shoot to the moon anyway.
Right.
So you
That's true.
figure as long as you're happy with where you're selling your strike price at, then you're perfectly fine. What a lot of people get mad at is, oh, I sold the 115 and now it's at 130 and I lost out on the gains. But think about it with the glass half full here. You bought
Yeah.
at 109, you're selling higher than you bought it at.
Yeah,
That's
you're still
exactly
making
what you
money.
agreed on when you did it.
Yeah,
So you should be happy about it. That's the best case scenario, right?
I agree with that. Yeah.
Which it's just so backward thinking with a lot of people are like, oh, it went up higher than that. Oh well, that's good.
Yeah. Yeah, I read a lot online where a lot of negativity around that idea and it really just didn't make sense to me to think of
Yeah,
it like that, you know?
right.
The,
There's
the
just
way I
great.
look at it is you're making money and half of the time I feel like I wouldn't be in the position knowing that I have the covered call on it anyways.
Yes.
You know? I don't know. That's the way I look at it.
Well, let's go over real quick what happens if you buy a stock and then it drops a lot, because that will eventually happen, even with a dividend company.
I did do that. Like that's an example of what happened to me with Meta. I did it with Meta
Yeah.
and uh
No,
I
they're not
think
a
I
dividend company, but just pretend they pay like a two
just for an
percent dividend or
example,
something.
yeah, just
So
just for the example.
let's say it was at 300 or so, 350, and you sold at 300, and then this happened, right?
Right.
This is when you pretty much have to play defense, and
Yeah.
you're not going to most likely profit on the trade. but you're just trying to
Yeah,
mitigate the amount of losses that you have.
okay, yeah, that's
So
a big topic.
what I usually do, and this is not, there's no right or wrong answer, but this is what I just do, is
Okay.
if I'm way lower than my initial purchase price, I
Mm-hmm.
tend to sell around a 0.2 to 0.3 delta. And then if it touches that price, I possibly will roll it up and out.
Okay, so
But
point
I
two,
don't
you said
always
point
do
two.
that. And you are locking in a loss.
Right. That's where I get like confused, or I guess not confused, but yeah, I guess that's my question on this topic is how do you recover from that? And then like, so yeah, so for this example, Meta does drop and then you do that. You said you sell that call at a point two delta and then
Yeah,
it goes
because I
above
want,
it.
essentially, whenever I get, um, let's say the stock's much lower than I bought it at, I just
Mm-hmm.
want to lower my cost basis relatively safely.
Okay.
And the way to do that is they're usually around a 0.2, 0.3 delta in most cases.
Okay. All right.
Because if you do a 0.2 delta, there's an 80% chance it won't go up to that price. But at least
Okay.
you're taking in some premium, right?
There's something at least. Okay.
Yeah. If you sell a 0.05, 0.1 delta, you won't make anything. And then you pretty much have to have it go up.
Right. Okay.
But
Yeah,
if
at
you
that point.
sell, I like around 0.2 to 0.3 as a sweet spot for me, just
Okay.
because you're lowering your break even quite a bit. And you gotta be patient, obviously,
You just,
because it depends
yeah.
on what the drop
Okay.
is. Like if Meta went from 384 to 88, like there's almost nothing you could have done to like make that work out in the end.
Right.
And
Okay.
this is what
So
this
it's
is
just
what it is.
patience. Yeah.
Yeah,
Okay.
I mean, if you think that there's a fundamental difference with the company, you probably should just get out and just take a
Yeah.
look.
Okay.
But then again, we're not soothsayers and truth tellers. We didn't know that this would happen, right? Like
Right.
when
Right.
you're over here at like 220 from
Mm-hmm.
that big drop, you're like, oh, there's a good chance of recovery.
Yeah. And then
And
it
it didn't
doesn't.
recover.
Yeah. Yeah.
That's the
Okay.
nature of just trading in general, right?
Yeah. Yeah. You're right. Do you recommend when doing covered calls, monthly expirations or weekly, 2 weeks?
Depends on the stock. Like if it's more of a
If
long
you're if
term
I'm an active trader.
active trader, I wouldn't do weekly. It depends on your type of stock, though. Like if it's a dividend
Okay.
stock that has a low IV, doing weekly really isn't worth it in most cases. Like you're not
Okay.
going to make much premium on it.
Okay.
Um, so I'd usually go at least 1 month out.
Okay.
Apple
And then,
might be an exception where I've seen people do weekly on Apple.
okay.
Apple's at 152. You need 15 grand to do it, but
Mm-hmm.
let's say you bought at 152 and then you sell to 155. You can make 90 bucks on it. Not great, but it's, over 0.5% in a week.
Yeah.
And then you would get a little capital gains. So I know people that do that. They go around 0.2, 0.3 delta on the call side.
Okay.
Um,
Yeah, I was just curious.
Another thing to consider is, do you think the stock is currently overvalued or at a good price? If you think a stock is overvalued, but you might want to enter a position, you should
Mm-hmm.
start by selling the cash secured put. Because the
Right.
goal
Okay.
is to get that stock at a lower than current price, right?
Yeah.
So let's say you like Apple as a company, but you think 152 is probably a little too high right now, fundamental. In that case, I might sell a weekly at 150
Okay.
because I'm getting $102 from it. You're getting about 0.8% in a week, which isn't bad.
No.
And you would be buying the shares $2.50 less. So you're essentially getting
Right.
paid to buy the stock cheaper.
Yeah, I like that idea.
And that's what Warren Buffett and a lot of these like huge
That's what they
account people
did.
do all the time. They'll sell
Okay.
slightly out of the money puts until they get signed.
Until
But they're
they,
also
yeah.
happy with the premium that they're getting anyway.
Right. Okay. I like that mentality behind it.
Right. Like you shouldn't feel bad, like, selling a
Getting,
monthly. You sell the 140 a month from now. That's
yeah,
a
yeah.
pretty decent sales price, right? So yeah, it could go to 120, 110, but if you did it right now at 152 compared to selling a 140 put, probably be happier selling at 140, right?
Right, right.
But if you think that the stock is appropriately valued, there's nothing wrong with just buying the 100 shares, sell the covered calls a little bit higher.
Okay.
Essentially, if you're a little more bullish, you should probably do the covered call strategy first. If you're
Okay,
a little bit bearish or you want to acquire shares cheaper, start with the cash put first.
okay, all right.
It's a wheel strategy. You could start the wheel wherever you want, right?
Which one? Yeah, right.
You can start
Okay.
at 12 o'clock or 6 o'clock. It doesn't matter. It's
Yeah,
the same
yeah.
thing in
Okay.
insurance.
I like that. Yeah. So it
Yeah,
really is
like,
based on.
but also think like with the wheel, you don't have to. All right, I sell the 140, I get a sign. Now I'm going to sell the covered call against it. You don't necessarily even have to do that, right? Let's say
Yeah,
you're a
there's
long-term
flexible.
Apple, you really like Apple, you just think it's too much. You sell the 140 call, month out, and then you get a sign at 140, let's say the stock's at 138. And maybe that's a good price that you wanted to hold it for a long time. So
Okay.
then you just wait and you just collect a little bit of dividends. You got a good company at a
Okay.
cheaper than current price. And maybe if it's at 200 in the future, then you want to lock in some profits, sell covered calls, and you're the renter, right?
Yeah. Okay.
Essentially renting out your shares to somebody else and then taking in money that way. So
Yeah.
it's very flexible. It's not just like one thing.
Yeah. It sounds like it.
You know what a covered strangle is by any chance?
I've been doing your futures trades.
Yeah.
So that, and I watch your videos on it, but that's like kind of what it's like
You could
having, well,
do,
while having 100 shares, you do the
right.
put and the call side. Is that
Essentially it. You could do a
okay?
covered strangle on any stock you want too. Doesn't have
Okay.
to be the futures. Bank of America, what you could do on Tuesday, buy 100 shares at 35,
Mm-hmm.
sell the 30, maybe four put. And then you would
Okay.
also sell a call against the shares you have. Maybe
Got
sell
it.
the 36 call.
Okay.
So in that case, you're taking in money in the call side and the put side. If the stock drops below 34, you just bought 200 shares because you already have
Okay.
100 and you're buying 200 shares cheaper than the current price and you lowered it because of your average is less, right?
Okay. And you had the call premium working.
Exactly. You would essentially take 35, 35, subtract what you get in the call side, subtract what you get in the put side.
Got
And
it.
then if you got a sign on the 34, you would do 35, 35 plus 34 times 200 shares, and then subtract the premiums you got.
Okay.
That
I
will tell
like
you what
that.
your average is for the 200.
Okay. I like
And it
that.
would be, and it would be lower, but I would only want to do that with companies you're willing to own 200 shares.
200. Okay. All right.
So yeah, one of my friends, he lives in San Antonio also, he does that all the time. Like he'll start it with a covered strangle, which is not as risky as just buying 200 shares at
Okay.
once. So he's kind of doing both sides at the same time.
Okay.
And that's how he likes to enter
I like
positions.
that. Okay.
And he does it with dividend companies like this.
Okay.
Yeah, like just remember, you don't have to reinvent the wheel on this stuff. Like you could easily do these strategies on safer, low IV stuff, and you could still reach your goals easily. I
Okay.
just happen to make 2 to 3% a month my goal, which is a little bit higher than what just owning SPY and doing nothing
Sure.
with it. But there's absolutely nothing wrong with doing these like dividend growers, buy the
Okay.
shares, just hang out, sell a covered
Yeah.
call at a higher price.
Yeah. I like that. And yeah, I kind of want to put a portion of my portfolio to doing that on top of kind of the option stuff
Right.
in your
Just remember when you're doing that, you get paid. I think it's like the triple income system, they say.
yeah.
Get
Yeah.
paid on the dividend. You're getting paid on a company that will probably raise their dividend in the future. You're also getting extra dividend payments if you reinvest the dividends into more shares.
Okay.
And then you get a premiums.
Okay.
So there's a
Uh,
lot of ways that you can make a little bit of money,
yeah.
but it
I
all
like
adds
that.
up and you could get a good return in the end.
Yes. I like that.
One of my other friends, he's retired. He buys REITs a lot, and
Okay.
he'll buy 100 shares and then sell a year out call.
A year out.
Yeah, because he doesn't want to have to worry about it too much and
That makes sense.
like yes, you can make a little bit more if you sold them every month or maybe 3 months, but he's just like, well, I'm just hanging out here.
Yeah, he just no stress into managing it.
Mhm.
He already knows for when he looks at it in a
Yep.
year or whatever.
Yeah, he does it for the January, and he knows when around December comes, he'll either decide to
Oh,
let it go or he
okay.
might roll it or sell a new one in
Okay.
January again.
All right.
Excuse me.
I like that.
All
Yeah,
different ideas to consider. There's no right or wrong way to go. I think one
okay,
of the big things is to base it on your risk tolerance. Like, are you willing to possibly take higher IV stocks eventually because you'd like a higher target return? But the way that I usually like to look at things is what is the least amount of risk that I could take to get the return that would reach my goals?
right,
And 2%, I'm gonna be more than fine in retirement if I'm averaging 2% a month.
yeah,
I'll be fine at 1% a month.
yeah, yeah, exactly. Okay,
So could I make 10% some months? Sure. But then I could also blow up accounts and then have some
yeah,
pretty big negatives. And I'd
right,
rather not have the stress of doing that.
agreed. Okay,
We got about
all
four
right.
minutes left. Any other general questions?
No, I'm probably gonna have questions along the way, is obviously, and I won't be shy to ask. But as of
Yeah.
right now, no. Um, I think like the only ones I think I just got to get familiar with the wheel on the futures. I think that's the only thing I will have a question
Yeah.
on assignment. I think just because
Right.
they're different, right? Because it's not like it gets called away. There's like a covered call on MES.
It would get called away if you were currently owning a contract and you
Mm-hmm.
sold a call against it. You haven't been in beta traders long enough, but that happened to us a few times in like November and October last year.
Okay.
You just happen to be in actually the one of the best runs of this strategy because we never got called. We never even got the put like assigned to us yet.
Oh, okay. All right.
So we're getting pretty much max profit every week so far. I
Okay.
mean, it won't always happen that way. So then, yeah,
Sure.
obviously stay tuned and ask questions when you do get a sign, like what we do. But yeah, if you
Yeah.
own a contract and sell a call, it's just like a covered call.
Okay. All
You'll
right.
just lose the one contract
Okay.
instead of losing 100 shares of stock.
Okay. All right. Yeah, I guess those are just the questions that I'll probably will have if
Right.
assignment does come.
And it will eventually. But it's a really good strategy the last few months. I mean,
Is it? Okay.
we're making a lot more in the covered strangles than the low delta strangles. Because those could
Okay.
take in, 70, $80 per week off
Yeah.
about 2 grand. So
Yeah.
that's a really good return.
Yeah, I noticed that in your file. So I that definitely piqued my interest.
And then oh, I forgot what I was gonna say with that. But when you're doing those strategies, you have to be willing to get a sign and not get too upset about it.
Okay.
Where I could see relatively newer members like, oh no, I got a sign. I mean, you knew what you had to do when you're doing
Yeah.
this.
Yeah.
And it's gonna happen eventually. Oh yeah. What I wanted to mention real quick, if you're in the end of the expiration cycle, you would have to roll the futures out.
Okay. I do remember you saying that. Yes. Okay.
So this might be the last week I do a weekly covered strangle because MES expires in 26 days.
Okay.
So I probably don't want to sell another weekly 20 days out because if you
Okay.
do get a sign, it could get a little annoying. So
Okay.
if this next one doesn't get assigned, I'll probably do like a 40-day out, which would end up being
Okay.
33 days. Just FYI
Okay.
on that.
All right.
It'll just make things simpler. You'll
Yeah,
see.
that makes sense. Okay.
I never had
Uh,
to roll to the next expiration, but it might eventually happen. So that's why you just be aware of it. And if you could try not to get into the situations a lot.
okay. Yeah,
All right.
I'll ask questions as I go.
Sounds good. All right. We
Thank
gotta
you.
get going. It's about to end.
Yeah, I see that. Thank you very much.
No problem. I'll talk to you
I
in the Discord.
appreciate it.
You have a good
Alrighty.
night.
You too.